Hey guys, sorry guys. Hey guys, good afternoon, everybody. Today is Monday, January 8th. It is 2:01 right now. Our mentoring session is scheduled for 2 o'clock, so I'm gonna go ahead and set up this room real quick and we'll get started shortly. It's got a couple of things here to update and we should be good to go. All right. I'm still sick, it's super annoying. Still sick, so I'm like losing my voice sometimes when I speak. Let's update this real quick. Good. All right. Looks like we are good to go. Let me get this link sent out to you guys here in the premium. All right. Zoom link is sent out. Sent out here as well. All right, so I'll get a few moments for people to make their way in. And we will get started shortly. All right. All right, hey guys, good afternoon, everybody. Today is Monday, January 8th. It is 2:03 right now. Scheduled mentoring sessions for 2 o'clock. Main topics that we'll be covering during this mentoring session will be the breakout V3 continuation plus confluences and red flags, V1 variation plus confluences and red flags, momentum pullback scalp, confluences and red flags, and lastly, the trailing stop indicator. So if there's anything else that you guys want me to cover, feel free to put them in the chat. That's pretty much on our agenda for today. But I'll stay on and answer whatever questions you guys have. So I'll get a few more moments for people to make their way in, and then we'll get started shortly. All right, get a few more moments, and then we will get started with the breakout V3 continuations. Let's see, quick question from Isav. Isav said, hey man, wondered if you could help. What is the best prop firm with low spreads? The only prop firm that I really recommend is FTMO. That's pretty much the only one. The spreads are pretty decent. They're probably as good as it gets. Reliability's there, payout structure is there. Everything's pretty much there for the most part. I guess if you're trying to trade futures, then you probably want to use something like Top Step. But for the most part, FTMO is probably the best all around. So that's the only one I can recommend to anybody. It costs a little more to use them, but you get what you pay for. You get reliability, they're trusted in the space, spreads are good. I mean, I can't really say much bad for FTMO. The only thing that I wish they had was TradingView compatibility, but you can't get everything. So unfortunately, that's the only thing that I can say that's bad about FTMO. But it's not really a bad thing. It's just something that they're not able to do. All right, guys, good afternoon, everybody. Today is Monday, January 8th. It is 2:05 right now, 2:06. So I'm going to start off with the mentoring session. Our main topics for the day, again, is going to be the breakout V3 continuation, V1 variation, momentum pullback scalp, and the trailing stop indicator. I'll also be going over confluences and red flags for these three main strategies. I think these are going to be our main strategies moving forward for our live sessions. There's a ton of different strategies that you can apply, but I think these are probably going to be the best ones for us to really drill down on because they work very well in all market conditions. So, all right, let's get started. Yeah, no problem, Asaf. I think you made a good decision by using FTMO. I've been using them for years and they're pretty consistent. Haven't really had any issues with them. And if you do have any issues, their support team is super quick to get on top of it. So, all right, let's start off with the breakout V3 continuation. So I'll show you an example of what a breakout V3 continuation looks like. And then I'll show you some red flags and some confluences to pretty much lay out when I would take the trade and when I wouldn't take the trade. So let's see. All right, so there's one right here. This is probably I'll go back in time. So I'll go from like current time and I'll just go back from today. This is today at about 12:50. I personally wouldn't have taken this trade because this is so late into the session. I stopped trading after 7:30. So this is like late at the end of the session, but this still qualifies as an opportunity for the breakout V3. So let me put the criteria up here for the breakout V3. Sorry, breakout V3 continuation. So the main difference with the breakout V3 and the breakout V3 continuation is that the breakout V3 happens on market open. It's like the first pattern that shows up, but the breakout V3 continuation allows you to continue taking this type of setup, but throughout the session. So for the first requirement, you want to confirm a valid, well, it doesn't have to be valid, just any momentum signal. So if you guys are not familiar with the momentum signals are going to be the these green and red bars. So the green bars, they go up and down. The red bars, they go up and down. When you see a green bar like this is a bullish momentum. This indicates that momentum is going to go to the upside. Vice versa, when you see a red momentum signal like this, this indicates that momentum is going to the downside. So all you're looking for is a momentum signal. You can see right here that we have a buy momentum signal. So that's going to be step one, confirm momentum signal, which is right here. Step two, you want to confirm that the following candle is the same color as momentum. So if you get a green buy signal right here, you want to confirm that the candle right after it is going to be green as well. So step one, momentum signal. Step two, green candle right here, which matches the buy signal. So with that said, you have steps 1 and 2 met. For step 3, you want to enter on the open of the following candle. So as soon as this candle here closes, you'll be entering a buy signal or a buy entry right here. And you're going to set your TP stop loss to 1030. So typically for the regular breakout, it'd be 30-30 because you're going for the full move. But for the continuation, you're only going for 100 pips. It's just a quick scalp in and out. So once you have that set up right there, this here is going to be the breakout V3 continuation. So going over here to the follow-up is basically where are the red flags, right? So the red flag would be down here. Let me see if I can zoom out a little bit. Red flags are pretty much going to be any of the lines that are horizontal going left to right. So this green line right here is a red flag. This is going to be the New York high. This red line right here is going to be the London high, Asia high, New York low, Asia low, etc. London low right here. So basically, the red flags that we're looking for is you want to make sure that the candle before entry is not touching any of these red flags and that your TP doesn't have to pass any of those red flags. So as you can see over here, there's no red flags because everything's so far out. At this point, everything's perfectly fine. We have everything lined up here. It's pretty much a clear direction to the upside, right? So that's going to be the red flags that you typically look for. For confluences, the main confluence that you want to look for is you just want to look back. So look back to the first or the most recent pattern. So if you look back and you look down here, this is going to be a V1 pattern, right? If you guys are not familiar with the V1 pattern is going to be a double body or a double wick off a high low. So again, you would use one of my indicators, which is a high-low indicator. You can see the high indicators right here, low indicators right here, high indicators right here. Since the entry is right here, you want to look back to the most recent low since you're looking for a buy, right? So if you look back to this point right here, you'll see that there's a low. The confluence that you want is you want to see a double body or a double wick. You can see right here that this is a double body because you have a red candle that pushes to the downside, and then you have a green candle that pushes immediately up. And this confirms a reversal pattern back to the upside for correction. So this is the main confluence you're looking for. You're going to make sure that there's no red flags, meaning there's no horizontal lines around entry point or target point. And then for the confluence, you want to make sure that you have a V1 pattern. This isn't required, but this is a confluence that I typically look for. And whenever you have a confluence like that, it almost always hits, like almost every time. So another confluence that you want to look for is the trend, right? The trend isn't required for this strategy, but for me personally, I always look for the A+ setups. I look for the setups that are almost guaranteed to hit. So although trend is not required, I still leave my pivots up. You can see right here, price is bullish, and you can see that because price is above the pivots are angling up. And if you look down below at the trend meter is also green. So this stuff is not required, but this stuff is an add-on. So you already have a strategy here. The strategy's been tested. It has like, above a 65% win rate. Then you add this confluence with the V1 pattern. This will probably increase another 5% probability. And then you have the bullish trend. That probably increases another 5% probability. And then at that point, you have like a 75 to 80% chance of this actually winning, right? So the more confluences you have, the better, of course. And you can take every entry if you want. And I'll go back to this entry right here because there's another one right next to it. Or actually, this isn't going to be a setup because you can't tell if it's red or not. But I'll look at entries that go against the trend. So I'll show you that it does work in both directions and or for a lot of situations. But I'll show you good entries and I'll show you bad entries. So I would consider this A+ setup. So many confluences, everything looks good. There's going to be another setup right here where I'll show you where it doesn't look good. But let's just focus on this right here. So again, first requirement, confirm momentum signal, buy signal right here. Second, confirm that the following candle is the same color of momentum. This is a green candle right here. So you have the setup right there. You can enter at this point. Again, reminder, no red flags. Next, confluence. You can see there's a double body rejection right here, confirming that price is going to reverse from the downside and swing back up. On top of that, we have a bullish trend with regard to the pivots and a bullish trend with regard to the trend meter. So you have a bunch of confluences here. You have 1, 2, 3 confluences lining up to indicate that price is likely to push to the upside. So if you would have taken this trade, you would have let the trade run. And there you go, full TP. Like literally no drawdown. Price went straight to its TP right there. So you guys can see how this becomes an A+ setup because you have so many confluences, right? So once you have that set up, perfect entry right there. I would have taken this if this happened during my trading hours, but this happened so far in the day that I wouldn't have been trading at this time. So there goes the setup right there. If you have any questions regarding that, feel free to pop in the chat. But now let's go over here and I'll show you an example of a bad entry. So there's no entry right here. There's a sell signal, but there's no red candle following it. This right here is another setup. It's a valid entry, but not one that I would take because I'll show you right here. It's pretty obvious, the red flag right there, right? So again, let's go over the requirements. First requirement, confirm momentum signal. We have a buy signal right here. Second, confirm the following candle is the same color as momentum. We have a green candle right there. Third, you'd enter on the open of the following candle. So you'd enter right here. But now let's go over the red flags. So red flags, let me see if I have the markup here. I know I have one here somewhere. Red flags. Okay, so I mean, it's pretty obvious. Basically, any lines that go left to right, that's going to be considered red flag. Sessions, which is going to be this green line right here. That's one of them. That's going to be number 1. I always avoid trades whenever price is touching it or has to pass it. So you can see this right here. The setup is already aligned. So you have a buy signal, green candle. You can see that this green candle right here, the entry candle, is like literally touching the green line right there, right? So this is obviously a huge red flag. I would skip this 100% and not take the trade. And you'll see why in a few. So going over to the confluences, you'll see there's a V1 pattern here. But again, that's pretty much out the window. If I see that there's a red flag, it doesn't matter how many confluences I see, I wouldn't take this entry here. So let's just go and show you what happens here if you took the trade at this red flag. See how price pulls down, fakes out, and would have stopped you out right there. So it's pretty obvious. I mean, whenever price is touching any of these lines here, you'll see that this is typically where a lot of manipulation happens. You can see here when price touched the candle right there, it touched the green line, manipulation, right? Came up, faked out. Again, right here, right next to it, came up, faked out. Came up over here, came up, faked out. No difference, right? It's a bunch of fake outs. This is why we avoid trades at these red flags. Again, right here on the bottom, you can see same situation. Price comes up, touches the horizontal lines. I'll turn off the pivots real quick. We'll turn off momentum so you can see them a lot clearer. Turn off the high-low indicator. You can see whenever price touches these areas, a lot of manipulation happens. So whenever you get an entry that's either touching the entry or if your TP has to cross it, I would just skip it because you kind of put yourself up in a risky position if you guys take any trades that are touching these red flags. So hopefully that makes sense. I mean, it's pretty obvious. Just whenever price touches or has to touch any of these horizontal lines, just skip the trade. And that's going to be the red flags. So if there's any questions, guys, feel free to put them in the chat. I'll see if there's another opportunity here that we can look for an example. Here's one more right here. So you can see these entries come up a lot. So you don't have to take every single entry. When the entries come up and they fit your criteria, then, just take the trade. You don't have to think twice. So again, right here, step one, confirm momentum signal. We have a buy signal right here. Step two, confirm the following candle is the same color. Buy signal, green candle. You enter right here for a buy. TP stop loss, 1030. Now let's look at the red flags. There's a session up here, but it's so far up that it's completely fine, right? Because price is going to hit your TP before it reaches that red flag. So that's fine. There's no red flags here. Now let's take a look at the confluences. Right here, you can see there's a double body rejection off here for a V1. That's going to be one confluence. You can see price is above the pivots. The pivots are angling up. That's another confluence. You can see the trend meter down below is green. Another confluence. You have three confluences for a buy here. Your entries for a buy. Odds of this going up to your TP, very likely. This is probably another A+ setup. So you see something like this, perfectly set up, ready to go. You have your trade set up. You let the trade run. Takes a while, but full TP. Takes a couple minutes, kind of bounces around a bit, eventually shoots up, hits your full TP. Another setup right there. Let's go back again. So pretty much every buy entry that I showed you here with that did hit red flags, full TPs. Again, right here, another entry. Same setup. Go and grab this over here. So let's see, one question from Nikki. Nikki's asking, does the strength of closing candle matter? I know it helps, or as long as it's green. So, it's going to be different when you're trading live because, so like you said, the strength of the candle doesn't really matter too much, but when you're watching it live, like say, for example, you're watching it live and you're waiting for this candle to close. Say not this candle right here, but say like if you're looking at something like this right here, right? You see how small this candle is? If you're watching this live, odds of you catching this closing as green is going to be very unlikely, right? Because if it closed like this, you can already tell that at the very last second, price is moving up and down, right? Because if it was a pretty clear green candle, it'd be like way up here, right? You'd have a whole green body up here. But you can see this right here. If you measure how big this body is, this body's not even 1 point. So realistically, it looks like it's really easy to see when you're looking back in time because you can just pinpoint entries. But when you're watching it live, these candles are moving so quick that it's going to turn red, turn green, turn red. And at the last second, it'll turn green. You're probably going to miss the entry. So personally, I don't think it really matters. For the most part, if you're able to confirm, like say, for example, the candle's like super big and it's green, for sure it's going to close green. So you're going to take the entry even if it pulls back a little bit. But in a situation like this, you probably wouldn't be able to catch it because it's moving so low. Again, the ATR here is super low, so you probably wouldn't even be trading to begin with. But this is a situation where you would want to, where it would kind of matter. It would kind of matter, but then it kind of wouldn't because realistically, you wouldn't be taking the trade to begin with. Because you're like, oh, I'm going to wait for it to close green. And at the last second, it turns green. And at that point, it's too late for you to enter because price would have already moved. So short answer to your question is as long as it's green, yes, that's correct. But under real market conditions, you're probably going to miss an entry like that if it happens that quickly. Does that make sense, Nikki? Yeah, I know it's hard because you guys will see sometimes on the live session too that like I'll be looking for an entry and it's like a perfect entry, right? But then I'm like, okay, I'm gonna wait for this candle to close. And sometimes I just miss it because as soon as it closes green at the last second and then it shoots immediately up. Oops. What did I do there? There we go. Yeah, it shoots immediately up and then we just miss the trade completely. Yeah, it kind of happened today too with the other entry that we took where that came up. These entries happen super quickly, so you have to be paying attention to the candle close. And if it's a maybe, then odds of you taking it are probably unlikely. All right, so this was the setup that I was going to show you guys again. So this is the last setup for the breakout V3 continuation. If there's any other setups that you want me to show you, then let me know. But I mean, it's pretty obvious the red flags. You're just making sure that price is not touching any of the sessions. So again, right here, same setup. There's probably not going to be as many confluences here, but I'm going to show you here how everything kind of lines up. So this again right here is another entry. You have a buy signal and it's followed by a green candle. With that said, you have an entry right here for a buy. Now let's take a look at the red flags. Looking across the chart here, you'll see that there's no sessions. There's a session down here, but it's pretty far from actual price. So with that said, there's no red flags in the immediate area. Next, we'll take a look at the confluences. So looking back over here at the most recent low, there's no double body rejection right there. So there's no V1 pattern. So for me personally, I wouldn't have taken this trade here. This is a decent setup, but I wouldn't take it because I personally look for the V1 pattern right there to give me a very strong confluence that price is likely to push right through. So for me personally, I wouldn't take this trade, but this trade does meet criteria. You look down below, the trend meter is currently blue. This means it's neutral. So again, no confluence there. So for the pivots here, you can see that price is slightly bullish, but it's not very strong. You can see price is above the pivots, but it just slightly got above it. It's not like how it looks like over here, where it's pretty clear that price is above the pivots, right? So with that said, this here would be an entry, but if we were on the live session, I would have told you guys that I would have sat out of this because it doesn't meet all my criteria, my personal criteria. However, this strategy meets criteria for the standalone requirements. And if you wanted to take this, I would have marked it up for you guys. And then if you guys see here, it plays right through, right? So the reason why you have to be picky about these entries is because we're trading with a negative risk reward, right? You don't want to take trades that are too risky because if you take a loss, then you're going to be stuck with a loss and you're going to have to win a couple trades to bounce back to break even. So negative risk reward is fine as long as you stick with quality entries because there's going to be a lot of entries that come up and you don't have to take every single entry. You basically want to look for a few good entries a day, one or two, and rinse and repeat the process every single day. So this right here, again, it's a setup for an entry, but not one that I would personally take because it doesn't meet my criteria of the confluences. Delisa is asking, what are the trend meter settings for scalping? You just set them in the chart. So if you have the default settings will be set to intraday. So it'll have it at 30-minute, 1 hour, 2 hour, 4 hour. This is kind of pointless if you're scalping because you don't care, like it doesn't really matter what's happening on the 30-minute or 4 hour because you want to see what's happening right then and there. So what you'll do is you'll set all of these to chart. Once you have these set to chart, it's going to be assigned to whatever time frame you have on your chart. And since you're on the 1 minute, it's going to show you what the 1 minute trend is. So you just set it to chart, and that's going to pretty much give you the criteria that you need. Yeah, no problem, Delisa. I know it's a common question. All right, so let me show you an example here of an entry that meets criteria, but again, it's not one that I would personally take. So let's see. Bamal said, is 10, 10, 10, 11 entry against an entry? Yeah, sure, we'll take a look at that. So let's go to that one instead, because I think this one's a better entry, or it's a better example. So this right here is an entry. So again, like I mentioned, you don't need to use the trend, but the trend is going to be useful for you. So like for me personally, I would use the trend because I'm only looking for high quality setups. So for me personally, I wouldn't take this trade here, but this trade here does meet criteria. So step 1, confirm momentum signal. There's a sell signal right here. Step 2, confirm that the following candle is the same color as momentum. There's a red candle right here. This meets criteria for a sell, right? So this meets criteria for a sell right here. Now let's take a look at the red flags. The sessions is down here. So this is okay because it's going to hit your TP, or it can hit your TP before it reaches the sessions right here. So if you really wanted to take this trade and you just wanted to take trades in both directions, this right here would be the criteria, right? For the standalone strategy. So standalone strategy, everything's lined up here. Now let's take a look at the confluences. So looking over here at this most recent high, since you're looking for a sell, you're going to be looking at highs now. Instead of looking for lows, you're going to be looking for highs. You have a sell entry right here. You look back at the most recent high. You can see there's a double body rejection right there for a V1 pattern. So that's going to be one confluence. The second confluence, the trend is not here because the trend meter is green. And also, if you look at the pivots over here, the pivots are also bullish. So this right here, as I mentioned, the standalone strategy is probably like about a 65% win rate. You add the confluence of the V1 pattern right here, and this will probably add, 1 to 5% probability. So at that point, you probably have close to a 70% probability of this hitting. For me personally, that's not high enough. I want it to be up to like closer to like a 75 or 80, if not higher. Since there's only one confluence here, it's not going to add too much probability to the trade. But, like I said, if you want to take trades in both directions, that's completely fine. You can do that. And right here, you can see everything lines up. We'll run the trade here. You'll see it goes back and forth for a bit. This is why I don't take trades like this, because although the trade will hit, it takes forever for it to hit. And I don't like to be in a situation like that where I'm out of control, right? I like to be in control. I want the trade to hit within like 1 to 5 minutes. This year, you would have been holding on to this trade for like 1, 2, 3, 4. Let me just measure it. You'd have been holding on to this position for like 20 minutes almost. Yeah, exactly. But Mala said a nervous time, 20 minutes. It's a long time for a scalp. At that point, it becomes an intraday type trade or a day trade, and it kind of just messes with your trade psychology. So, I mean, if you have thick skin and you want to take the trades like this and they meet your criteria, then, go ahead and take it. But for me personally, I wouldn't want to hold on to a trade that runs for 20 minutes, especially not a scalp. Yeah, exactly. Maddie said he likes those that line up with the pivots and the trend. Yeah, Maddie, that's what I was mentioning earlier with the confluence is I like to look for that V1 pattern, and then I like to confirm the trend. So I want to confirm the trend with the pivots, and I also want to confirm the trend with the trend meter. So guys, if there's any other questions regarding the breakout V3 continuation, feel free to let me know, but it's pretty straightforward. It's a super simple strategy. The only additions that you want to look for when looking for quality entries is going to be the red flags and the confluences. But all right, so that's pretty much it for the breakout V3 continuation. Let's move on to the next topic for the day. Next topic for the day is going to be the V1 variation with confluence. So let me show you guys that. All right, let's see. So let me see whether there's any possible opportunity here. This here would be a possible entry, but it's a red flag. Here, I'll just show you why it's a red flag and why I wouldn't take it. Actually, it's not even an entry because there's a buy signal right there. Let me go back and see if I could find one. So for the V1 variation, you have to look for the bias still. And if you don't want to look for the bias, you'd still have to look for the trend. So I'll try to find some bias here because obviously the trend here is bullish. Okay, here's a perfect setup right here. Well, not a perfect setup, but this is going to be a setup of a traditional V1 variation, no confluence. So right here, you can see there's a double body rejection off this red candle right here and this green candle right here. So let me put up the criteria for the V1 variation. Man, I've been saying this for like over a year that I'm going to fix this, and I still haven't fixed it. I got to fix that so it's easier for us to see. But I mean, this strategy is super old. So again, confirm overall bias. We're just going to assume that the bias here was bullish because we can't really tell since this has happened back in time. So first, confirm overall bias. We're going to assume that this bias is bullish just because the trend here is bullish. You want to confirm a high low. You can see there's a low right here. Step 3, confirm that the candle following the high low is a double wick or double body. You can see there's a double body rejection right there. Once you have that set up, you're going to take a buy position right here. And this is going to be just a traditional V1 variation. You can see there's no red flag nearby. There's a session up here, but you'll be able to hit your TP before it reaches that session. So this is a traditional V1 variation. There's no confluences here that I would personally be looking for. I'm looking for a very specific confluence, just like with the breakout V3 continuation. I'm looking for a specific confluence right before. So I'll just show you where the confluence would be. For example, if you're looking for a buy, I'm going to look at the most recent low. You can see right here that there's a low right here, and I'll draw a zone at this point. You can see that nothing is rejecting off this low, right? So this doesn't meet criteria for the V1 that I personally take myself. But again, this is a plain normal V1 variation. If you wanted to take this, this is completely fine. You can take it yourself. But if you didn't, then you could have waited and just waited for the next entry to come up. But you can see right here, plays through, full TP right there. That's just a regular V1 variation. All right, let me see if I can find one here that actually does meet criteria. So this is going to be one thing that I guess I'm sort of testing still, because you can technically take V1 variation continuations as well, but you don't have the pending buy signal. But I want to find one here that does meet the criteria with the confluence that I'm specifically looking for. I don't see him here. Vimal's asking, is a counter scalp different to this? Yeah, the counter scalp is completely different from this. Totally different strategy. The counter scalp is you're looking for a momentum signal and you're looking for two candles opposite of that momentum signal. So it's like completely different. We can go over that later. So I'll go over a couple examples here and then I'll show you the counter scalp. But the counter scalp, it's a completely different strategy. There's nothing similar about it. But I'll show you the differences. So let me look for this V1 pattern that I'm looking for that meets my criteria. Let me see if we can find some. There's a bunch of red flags here, so obviously a lot of the stuff's going to be avoided. Let's see. Okay, there's one right here. These entries don't come up very often, but when they do come up, they typically hit. So, okay, here is a setup for a V1 variation. So right here, again, we're going to confirm overall bias. We can't really tell here what the overall bias was, but we're just going to say it was bullish just for this example here. To completely look at overall bias, you're going to look at retail sentiment, fundamental bias, and technical bias. Right here for the technicals, you can see that it's kind of bullish, but we can't really confirm retail or fundamental bias. I mean, technically we could confirm retail because, I mean, it's obviously bullish. It's been bullish for like the past, I don't know, 3 months now, 3 or 4 months. So retail sentiment here is obviously bullish. We can't really confirm, or I guess we can. So retail sentiment bullish, fundamentals here, 200 points in the green, bullish. Technicals here, we'll just assume it's bullish. But again, we can't really confirm for sure unless we were looking at this real time. But I'm going to use this as an example just to show you guys the setup that I typically look for when taking a V1 variation. So confirm overall bias, we're going to say it's bullish. Confirm the high low. You can see right here there's a low at this point. Step 3, you want to confirm that there's a double body or double wick. You can see there's a double body right here, right next to each other. So step 3 is in met. Step 4, you want to confirm a pending momentum in the direction of the trade. So we have a sell signal right here. Pending signal for the next one is going to be a buy. So we have that pending signal there for a buy. You're going to enter right here for a buy position. And then after this, I'm going to look up all of the red flags and confluences. So this right here would be a standalone V1 variation. So if you're just taking a plain V1 variation, no confluences, no red flags, this here is going to be the setup. Next, you want to look up the red flags, right? So red flags over here, you want to see if there's any horizontal lines. You'll see there's an Asia high right here, but it's pretty far out. So it should give you enough space for you to hit your TP before it gets caught in the manipulation up here, right? So there's no red flags here. And here's the big thing. The big thing is the confluence. So the confluence that I look for, which is similar to the confluence that we look at for the breakout V3 continuation is when you're looking for a buy here, you want to look at the most recent low. The most recent low is going to be right here, and you typically want to draw a zone at the wick. So you can see over here that there's a zone at the wick, right? Or there's a zone that price is rejecting off of. So there's a V1 pattern, and it's rejecting directly off this zone right here. So if you use this in conjunction with patterns, you'll see that this is like a double bottom because it establishes a bottom here, comes back down, another rejection right here. What's the odds of it bouncing off this and shooting up? Very likely, right? So for one, you have a reversal pattern here, and for two, you have it rejecting directly off this zone right here. So once you have this lined up here, this is the confluence that I typically look for V1 variations. And once you have that set up right there, you let the trade run, full TP. Like literally no drawdown. And it goes straight to your TP. So this is typically what I look for when I take a V1 variation. If you see this, odds of it hitting are very likely. You just got to make sure there's no red flags. There's nothing else going on. Like this is generally what you're looking for because this pretty much sets up for you're establishing a bottom basically. So you're able to establish the bottom because you can see over here that the V1 is rejecting directly off the support. This becomes a support pretty much. So that is pretty much what we would look for there. I mean, well, that's what I look for. You don't have to look for it, but that's a confluence that I use. Yeah, exactly. Maddie said this is fire. So there's another setup right here actually that happens right before it too. Let me just show you over here. There's another one that happens again. Let me see if this meets the criteria. So same thing again right here. There's a double body rejection, sell signal, pending buy signal, everything lines up. This here again would be another setup for a V1 variation. Actually, so this one right here wouldn't. So with the V1 patterns, you're looking for price to bounce off a certain area. This is kind of hard for me to explain to a lot of people because I try to make it as simple as possible. But this right here wouldn't be an actual V1 pattern because you're looking for price to push away from where it's bouncing from, right? If you understand how these candles move, the red candle means that price is actually coming down. So this doesn't necessarily mean that price is pushing up. This means that price is coming down. So you typically want to see that the low or whatever the entry candle is going to be green because it'll look like price is pushing up. Let me see if I back up a little more. Okay, so this right here would be the setup that you'd be looking for. Because when you have two green candles, this means that a floor has been established right here. And it's pushing away from this area. The red candle after it, this doesn't necessarily mean that price is pushing away. This means that price is coming back down. So this means that the candle opened up here and it's actually coming down lower. Sometimes you'll get candles like this, but you'd have to understand how these candles move to understand this. So this is where a lot of people get kind of tripped up on when they're looking for V1 variations because the criteria is super straightforward and simple, but the pattern that you're actually looking for is you're looking for price to push away from a certain area. So you're looking for it to push away from the low. This right here is not actually pushing away from the low. This is actually coming down because the candle opened up here and it's coming down. It's not actually pushing up. So I wouldn't have taken this one right here, obviously, but the one before it would meet criteria, it looks like. So again, right here, double body rejection. But going back to my criteria that I was mentioning earlier, this actually doesn't meet the criteria because the rejection doesn't happen off that bottom zone right there. See, Maddie has a question over here. Maddie said, are you looking for bounces off lower low or higher high? Just any high low, Maddie. So it doesn't matter if it's a higher high or a lower low. You're just looking for the V1 to bounce off structure because it pretty much sets up for a double bottom or a triple bottom or however many times it tests. For the most part, that's kind of what I'm looking for. So I'm just looking for it to double test it. So for example, there's like a bottom here. It establishes a support. I'm looking for price to come back down, provide a V1 pattern right here, and pretty much push away so I can take my TP to the upside. So, but I look at the most recent high low. So I'm looking for that quick double bottom. Like I don't care if this is like way over here and then it comes down like way over here, right? Because at this point, that support is like used up already. Or at that point, the support's pretty much been it's washed up at that point. I want it to happen super quick. So I want price to basically establish support, double bottom, straight up. Let's see, question from Kenny. Kenny is asking, what do you think about a V1 for a buy that bounces off a newly broken resistance zone? Wouldn't the resistance act as a support? Yeah, you could. That would be considered like a break and retest. But the thing with that, Kenny, so Kenny, he brought up a really good point. So Kenny is basically, what he mentioned was like, what if we use a high, right? So if price breaks past it and it establishes a break and retest of that price point. The thing with that right there, Kenny, is that in a lot of instances when that happens, price will probably be overextended, right? So let me show you, let me see if I can find an example of that. I mean, we're probably not going to find an example from today, but like just using this as an example right here, I guess, because this is kind of what you were mentioning. It's just not a V1, but usually you don't see patterns like that. Not for a V1. You'll see like the break and retest. And this is if you want to take, so say for example, you want to take like a high-low scalp, just like a basic high-low scalp, right? Sometimes people don't want to take it right away. So sometimes price will break structure and they don't want to enter right away because they're scared, right? They're like, oh, I don't know if this is going to actually push through. And they wait for the retest. So I think that type of pattern that you're looking for would be something for like a high-low scalp. But for a V1 variation, it does work. It just doesn't really happen very often because you can see when price breaks out of this area here, like it breaks that high, it's establishing new highs, not lows, right? So if you're looking for something like that, then price will have to push up pretty high, establish a high, then come back down. But at that point, there's going to be a bunch of lows already set up right here, right? There's going to probably be a low right there, and then another low right here. And at that point, I don't like reusing old support resistance because we're trading here on the 1 minute, so there's going to be a lot of support resistance that gets established. Like like we mentioned, here's a resistance right there. It now turned into a support, right? Price pushes away. At that point, there's a new resistance right here, right? Or there's new resistance right here. So I don't like using old resistance or old support because there's always new support resistance being established. For a move like that, I would probably look on the higher time frames because that's actually what I do on the higher time frames, Kenny. So if I was like trading on like the 1 hour or even the daily time frame, I would look for price to break structure, retest, but the retest would be a V1 pattern, right? Because when you have a situation like that, then you have a lot more space here for price to basically breathe, come back, retest it, and then come back higher. So for your setup there, Kenny, it does work. It just doesn't happen very often on the 1 minute. Because I mean, if I see one here, I'll show you, but it doesn't really happen too often because there's so many lows that get established, and there's so much noise on the lower time frames. So you're onto something, Kenny. But if I see a good example, I'll show you. But I can almost guarantee if you like look through the charts, you're probably gonna see maybe one that happens. It'll probably happen like once or twice a day, but you have to be on the charts for like 12 hours from like market open till market close to actually catch it, which I'm never gonna do. That's just way too much work for me personally. So I personally wouldn't be looking for a setup like that, but the setup is good and it does make sense. So let me see if I can find another example over here. I don't think there were really many from today. Okay, let's go to Friday. There's nothing over here for any of those V1 patterns. But again, guys, if there's any other questions regarding the V1s, feel free to pop into the chat. This is the best time for you guys to really ask questions because during the live session, we don't have time to really think about it or for me to answer any questions. Yeah, Maddie said we might get a lot of V1 back-to-back with V3s. Yeah, exactly. And that's why I'm focusing on those two strategies because the V1 strategy works very well with ranging conditions. So like what will happen a lot is price will range, like it's ranging right here. You'll get a V1 pattern. When it breaks out, then you'll get a breakout V3 continuation. Exactly, yeah. Yeah, and they complement each other because you can find the V1 leads up to um, a breakout V3. So that's where because I was doing a lot of this testing over the weekend, and I was like, this thing always hits, like almost always. It has like a very high win rate, like maybe like a 90% win rate over like the past 3 or 4 weeks. And I was like, okay, this is something I'm going to introduce to you guys because obviously it's going to be a lot easier if you're trading with Confluences versus trading standalone. Let's see. Yeah, Kenny said, okay, I see. So it'd most likely be a high-low scalp on the 1 minute. Yeah, exactly, Kenny. So if you're looking for a break and retest type pattern on the 1 minute, it'd usually be a high-low scalp. So you'll see a high-low scalp happen, and it'll come back and retest the structure. It'll probably be a double body, like you said, but it's not going to have a low. So you'll have it, it'll break past it. Let me see if I can see yeah, it's not too clear here. But you'll see it break past it, but it's not going to be a high low. See if I could. I just want to show you an example of that. So I'll just use this. This isn't a good example, but I'm just going to show you, like, just for example purposes. Like you'll see price break structure, so it'll be like a high-low scalp, and then you can see how price kind of comes down a little bit, comes back up, gives you a double body rejection. You're probably not going to have a high there. You'll see the double body, but you're probably not going to have a high because a lot of times it's still establishing lows when it breaks through for a high-low scalp. So this is pretty much the setup that you're looking for. But like I mentioned, this is not going to come up very often. You'll see it, but it's not going to, like, you'll have to literally be on the charts like all day to see a setup like this. But it is perfect. It's exactly what you're looking for. Yeah, so it's right there, Kenny. Price break structure. I know this isn't a really clean zone. I just kind of extended it out so you can kind of see what it would look like. But yeah, price breaks below, retest, double body rejection. And again, right there, that'd be the same setup that you'd be looking for. Perfect. So yeah, I'm pretty sure you get it. It's pretty straightforward. It's just looking for the setup there. And being on the 1 minute, you have to be like glued to the screen for you to have a setup like that. But all right, so let's see if there's any other opportunities here. Actually, there was one right here. I just realized it's a double wick. All right, same setup right here. So let me go and put up the criteria for the V1. All right, V1 variation. We can't really confirm what the overall bias was, but we're going to say it's bullish. I'm pretty sure retail sentiment was bullish, fundamentals are bullish. Technicals here are obviously bullish. You can see prices above the pivots, trend meters green, everything's pointing towards the upside. We have a V1 pattern here. So there's a double wick rejection right here. You can see from this red candle and this green candle right next to it. These wicks are on the same level. So this here would be a standalone V1 pattern. Now let's take a look at my red flags and take a look at my confluences. So right here, we got the setup 1030 split. V1 pattern. Now looking over at the red flags, there's no sessions that are touching current price. So we have a sessions up here, but we'll have enough space to hit our TP before our price reaches the sessions. And then same with down here. The sessions are kind of far off, right? So we have a double wick rejection right here for a V1 variation. Now let's take a look at the confluence that I just mentioned. So since you're looking for a buy here, you're going to look at the most recent low. So you're just going to look back to the most recent low, which is right here. You can draw a structure at the wick, and you can see how it's rejecting off this point here, right? This is basically a double bottom or a triple bottom. Price kind of broken close above it, retested, came back over here, rejection with the double body, double wick. This here basically indicates that, okay, this is a support now. Support's been established, and it's ready to shoot to the upside. This is a V1 that I would take myself. So everything lines up here. I'm ready to take my trade, take this for a buy, straight to TP right there. And it blasts right through it eventually. So that's a setup that I'm looking for. Let me see again over here if I can find another one. All right, another one right here. Actually, so this is going to be considered a V1 continuation. So the only difference, so the reason why it says continuation after is because there's no pending momentum. So I probably wouldn't take this here because there's no pending momentum, but some people like to take these types of trades. So again, right here, if you're looking for a V1 pattern, I mean, you don't have to, but this just goes out to the people who like to take the riskier trades. Because this is a V1 continuation, this is going to have a lower probability rate. So instead of a 60%, 65% per win rate, we'll probably call this like a 60%. So it kind of knocks you back a little bit because you don't have the setup here that you're really looking for, because you want to have more confluences. More confluences, the better. But again, you know, this here is not going to be a V1 variation. It's going to be a V1 variation, V1 continuation. So pretty much the same thing, except you're just not looking for, there's no pending momentum. So that's the only difference here, because we already have a sell signal here, but I'm just going to show you a pattern here that kind of lines up with what we're looking for. There's a double body rejection. You look at the most recent high right here, you can see it's rejecting off it. This here is obviously a support, resistance. And if you really, really wanted to take this trade, I wouldn't recommend it, but you know, some people will take this trade here. This kind of skips a step in the V1 pattern, which would be considered low quality in my opinion, but you can see right here that it still plays through. So some people like to take these trades. I don't take them because I'm only looking for A+ setups, but everybody's slightly different, right? Some people want to take certain trades while others want to take others. There's another V1 right here, but you wouldn't take it because obviously it's bearish right here. So you wouldn't take any buys at this specific point in place. Let me see if I can find another entry here. There's no double wig, double body. Yeah, exactly. Vimal said not for me. Exactly, not for me either. I'd rather stick to quality entries and just continue stacking my wins that way versus taking risky entries. It's just not worth the risk. But again, guys, if there's any other questions, feel free to put them in the chat. I don't really have to go over red flags too much because you guys already know where it's at. It's pretty much any horizontal line. So it's pretty straightforward and self-explanatory. So I don't really cover it very much because it's pretty obvious. Okay, so I think that's all the entries for Friday. I'll look for one more example here for the V1. And then after that, we'll move over to the momentum pullback scalp. All right, so this is Thursday. Just gonna go over here real quick. I don't see anything here. No double bodies, double wicks. Nothing there. All right, perfect. One right here. All right, same situation. I'm not gonna put the criteria up because it's just pretty straightforward. So again, right here, we have a double body rejection. This is a V1 variation. There's a pending buy signal. There's a sell signal right here. So the next signal is going to be a buy. So we have a pending buy signal, double body rejection. This right here, standalone again, will be a buy entry for the V1 variation. And then now let's take a look at the red flags. There's no sessions here, so there's no red flags. Now looking at the confluences, this is where it comes in big. So you can see prices above the pivots. This is going to confirm that it's in a bullish trend. That's one confluence. Second confluence here is going to be the trend meter. It's also green. This is going to confirm that price is bullish. Odds of this pushing to the upside are very likely. Lastly, this is my main confluence. I go over here, draw my structure, and you can see again right here, double bottom. Right, so you got a super confluence here, double bottom, bullish, V1 variation right here, reversal pattern. Odds of this pushing to your TP, very likely. This is probably like a 90% probability of it hitting. So once you have that lined up right there, you let the trade run, full TP right there, and it goes right through. So super simple, super straightforward. This is exactly what I look for the V1s. And I think this is good because you can see here that price is ranging, but we still have opportunity for entry here for the V1, right? So that's why I like these for the V1s. That's why I'm going to make this one of the staples, because the V1 is going to be good when price is ranging. Half of the time price is ranging, half of the time price is going directional, right? So when price is going directional, we'll look for breakout V3 continuations. When price is going back and forth, we'll take V1s. So it doesn't matter what the market's doing. Every day we're going to have like one or two very good entries. So you think about that. I mean, if you guys do the math, it's super simple, right? If you're on a 200K account, so say you're on a 200K account and you take 2 trades a day. So you're at 200K account, you're going for 100 pips. That's 2,000, right? You take 2 trades, that's 4,000 a day, right? So you do this every single day for 5 days times 5. You can probably pass your challenge in 1 week if you're disciplined and you just follow directions, right? I think that's the biggest problem. A lot of people don't know how to follow directions. Like I literally tell everybody that you just need to take 1 or 2 good entries a day. And if you can take 1 or 2 good entries, like 1 good V1 and 1, because it's going to happen, you're going to get this in the market a lot. You're going to get, let's clean this up a little bit. So typically this is how the market will usually move, right? You're going to have this crazy movement on open. Then it goes and it just starts to climb a little bit, right? Right here, you'll get V1 pattern and a breakout V3 continuation, right? There goes your first entry right there. And you guys see this happen every single day, same pattern. Breakout V3, full TP on the open, smooth. Now what happens from this point is price now starts to range, right? And then what happens when it ranges like this? This is where your V1 comes up. Price comes down, you get a V1 whatever zone right there. You get a V1 pattern right here. You take your second entry. Boom, there you go. 2 back-to-back wins. And that's all you need. If you take 2 back-to-back wins a day and not get greedy, like you'll be in the bank. Like it'll be easy for you to make X amount of profit every single day, right? If you could do this every single day for every single week for the rest of the year, that's like 20,000, for the week, and then you multiply it by 4 weeks, it's like 80K in a month. And you multiply it by 12, that's like almost $1 million in a year. And that's only taking 2 trades a day, like just patiently waiting for 2 entries a day. And that's my goal. I'm gonna try to hit this like by the end of the year. So I'm just gonna, you'll see me. I'm not gonna take very many entries, but I'm gonna be looking for these specific setups, and it's just gonna add up over and over, like over time. So I'm gonna make it a point that that's kind of what I'm gonna be looking for, and we'll see. It's perfect because it works in all market conditions. Sideways market, V1s, directional market, V3s. Super simple. Let's see. Wes is asking, hey Sean, do you think the V1 entry, the trade would be an even better setup if the candle closes above or below all pivots? Yeah. So if you get that situation where it's like pretty obvious that it's bullish or it's pretty obvious that it's bearish, then it's an even better setup. You're going to have like a very A+ setup, because that's kind of what happened right here, right? So this was considered, well, I mean, I guess it wasn't above the pivots completely. But yeah, I mean, if you were to get a setup like that above the pivots, for sure. Like, for example, if you had like something right here, like say, for example, you had a V1 right here, that'd be great because you already have a bullish setup and you're kind of just riding the wave. But at that point, at this point, when price is pushing up like this, you're probably going to get a breakout V3 continuation instead, because it's going to be directional at that point. So your V1s are probably going to happen when price is consolidating in between the range right here, like what happened earlier. So we had the V1 that happened right here, right? You'll probably get the V1 early, like when price is consolidating. And then when price breaks out of this consolidation, you'll probably get a breakout V3. I see it happen a lot. They usually follow each other. And this used to be something that we did last year, I think. Like last year, earlier in the session, if you guys remembered, we did momentum scalps on multiple time frames. It's pretty much the same thing that we were doing earlier this year. It's just I think this is a more cleaner and easier setup with less subjectivity. So it's pretty straightforward and easy. Yeah, Maddie said if the breakout V3 doesn't come up, you can look for a high low. Exactly. So you're basically just looking for V1s or V3 continuations. That's literally all you're looking for. So, and the thing is, the market's always going to do, there's always going to be two different markets, right? There's always going to be a ranging market for V1s, and there's always going to be a directional market for V3s. So it doesn't really matter what happens. As long as you're just patient and you wait for those setups, it'll come to you. It's just going to be a matter of time until it does. Let's see. Kenny said, this is dope. I used to take all the original V1s. It got burned so many times that I stopped taking it. But this variation makes much more sense according to how the market likes to move. Yeah. And it goes exactly in line with the way you like to trade too, Kenny. Because it's basically just direct price action, right? It's price action, but we're using my indicators to identify like perfect entry points. Because the thing is, like a lot of these lows, there's going to be a lot of lows here. There's always going to be a lot of lows. But my indicator kind of takes away the guesswork. It shows you where the lows are, and it tells you exactly where to focus on, versus looking at like every single low that pops up on here. So let's see. Kenny said just throwing ideas out there. Could there be a momentum pullback scalp V1 variation strategy? Yeah, no, it could be. Definitely. Well, so the way that I would use it is I would use it for the opposite. Let's see if we look up some of those examples here. So let me show you guys an example of when I would avoid a momentum pullback scalp. I think that's another key thing here that we can look at. So, okay, so there's a perfect example right here, actually. That is a super perfect example right here. Actually, no, I take that back. It's not because there's another high right here. This is kind of late in the session. Let's see. Let me check the levels. Okay, so here's an example. Yeah, actually, this is a good example right here. Okay, oh, well, this is obviously not a trade. It's at a red flag. So this here would obviously not be a trade for a momentum pullback scalp. I try to use this as an example, but there's a session right there. So we had price push up right here, price pulled back. Obviously, the entry would have been right here at the 80 mark, but there's a session right there. So no entry there. This is meet criteria. That doesn't meet criteria. For a lot of these momentum pullback scalps, they tend to happen like when the volatility is high. So the volatility is kind of low at this point already. So it's probably not going to be any setups here. Okay, let's go over here like earlier in the morning. I think there was a setup here, but it still wouldn't meet criteria because of the the sessions. Yeah, I don't think there's any entries here for today. I thought I saw one during the live session, but I guess we didn't. All right, let me go to Friday. But yeah, this is pretty much what I did all weekend, guys. I pretty much just sat on my computer and I was looking up different patterns to improve our entries. And I think I just hit the gold mine with these confluences. Normally, a regular person wouldn't share this with their group, but I don't mind sharing it with you guys. I mean, I feel like this is like good karma coming back to me. I'm going to show you guys how this works, and then it's just going to come right back to me. I'm going to make so much profit applying this. And then you guys are also going to help me because you guys can help me call this out. Or if you guys see the pattern, you guys will call it out as well. So it goes both ways. I help you guys with taking these trades, and then we both get better at it because we're looking for the same thing here. So, all right, let me see if we have a setup over here. Price pushes up, retraces down. No, this would be, it's right at the sessions again right there, so it wouldn't be an entry. Price pushes down. Trend gets confirmed right here. Okay, so there might be an entry right here. Let me check real quick. No, it actually doesn't come down that far. Price pushes up, red candle, it doesn't come down. Sell signal. I don't think there's been I can't remember the last time we took a momentum pullback scalp. Let's see. I don't even see any entries here. I'm trying to find one. Like even just a regular entry. Actually, okay, let me go over here. I think there's gonna be a session here, so I don't think this will even be an entry for us. All right, so price pulls back, shoots up right here. Again, this wouldn't be an entry because of the let me see. Yeah, I mean this just wouldn't be an entry to begin with because it's like literally at the sessions. So price pulls down. We don't even have the trend yet. All right, now we have a trend. See if price pulls up. Okay, so let's see if this here would line up. All right, so price pulls back. Okay, so I'll just use this as an example. It's not a good example, but this is probably as close as it'll get to like what I'm trying to show you guys here. So basically, we have a sell signal, the trend confirmed right here. So you can start looking for entries after this is confirmed. So the entry starts at, you can start looking for entry at some point down here, right? So price comes down, we have a green candle here, which retraces up. Your entry would be right here at the 50 mark for a sell. It'd be a 10-25 split. But this is kind of what I was referring to earlier with, where you would avoid a momentum pullback scalp. So basically what you'd look for here is this would be happening so quick that you wouldn't even look at this. You'd look at the most recent one over here. You're basically looking for a floor. You're looking for a floor, you're looking for a ceiling to prevent getting caught in a fake out or basically, I mean, literally a fake out. So like, for example, here, you look back at the most recent low, and you can see that there's a double body rejection right here, right? So if you see a double body rejection like that, odds of it pushing up higher are pretty much very likely. This is kind of similar to the V1 that we were just looking at. So you see how there's a double body or a double bottom? This is what you don't want to get caught in. So if you see a momentum pullback scalp, you look back at the most recent low, and if you see a structure there, then at this point, I would have just skipped this trade here. Even though this is it'll probably just fill it real quick and go straight to TP. I would have skipped it for this very reason, because I don't want to be caught in a double bottom right here. So you can see price does kind of fake out a little bit, pushes up, and eventually comes back down. But this trade would have taken for a very long time. Like this would have been running for, I don't know, 1, 2, 3, 4, 5, 6. About 10 minutes in total. And this is kind of like what I would be avoiding here. So it's not a good example, but that's exactly what I'm looking for. I'm just looking for structure. That's kind of what I'm doing for all the strategies. So my confluence for the V1 variation is I'm looking for structure to create a double bottom or a double top and rejection from there straight into my direction. The breakout V3 continuation, I'm looking for a V1 that's before it, because that'll indicate that there's a reversal happening and the direction is going to continue. And then same with the momentum pullback scalp here. I'm looking for the same thing, but I'm looking for these patterns here to basically tell me not to take the trade. So I'm looking for reasons not to take it when looking at the momentum pullback scalps. So let me just zoom over here a little bit, see if there's any others, but I don't think I'm going to see any here. Let's see, nothing here. Nothing here. We haven't really had too much of a directional push, that's why. So it's kind of hard to find a lot of these momentum pullback scalps. These were coming up a lot like last month and the month before that, but other than that, not so much. Okay, so there's another example here, I think. This is pre-market, so actually we wouldn't even look. You guys can look at the ATRs at 5. You wouldn't even be trading at this time. Oh, gotcha. Yeah. So Kenny basically mentioned that like a momentum pullback scalp variation. Yeah, you can find that too. But if you're looking for a momentum scalp variation, that's basically a V1 continuation. So it's the same thing. I mean, there's already a strategy for that. So you could kind of you could take a V1 continuation, like basically no momentum, because you would already have the momentum, right? So like what Kenny's basically saying here is like, what if we had a V1 momentum pullback scalp, which makes sense but then it would just be considered a V1 continuation, because that's the difference between the V1 and the V1 continuation. It's just the V1 has a pending momentum and the V1 continuation doesn't. So, I mean, realistically, if that's what you're looking for, Kenny, it would just be a continuation. Because the main difference is that it just doesn't have the momentum here. So confirm trading in the direction momentum. That means the momentum's already up. And that's exactly what this strategy is. So the V1 variation continuation is basically a momentum pullback scalp V1. Because for a V1, you need to have a pending momentum. But when you're looking for a momentum pullback scalp, you already have that momentum there. So yeah, that's pretty much it, Kenny. So that's actually a strategy already. It's just we don't use it very often because I typically like trading with a pending momentum because I like getting that extra push. Let's see. CT said he took a momentum pullback scalp at 11:03 today. Let's see, 11:03. So right here. So CT took this one right here. It looks like it might have happened. Let's see. 11:03. So it looks like the setup actually would have came up earlier, CT, but you took a later one, which is completely fine. You know, the momentum pullback scalp sometimes just continues. It just continues along. So like the original entry actually would have happened right here, it looks like. We had a buy signal, price pushed up. The retracement candle would have happened right here, but it never pulled down for entry. Pushed back up, retracement again right here. So the entry actually would have happened right here initially at 10:50. So this is where the original entry would happen, but you can see that it continues to play through. Price pushes up right here, retraces again right here. Another entry at 10:56 right there. And then it looks like CT took this one over here at 11:03. So again, right here, price comes down. It actually took this one right here at 11:03. Same situation. I mean, there's like a lot of different opportunities here. Price pushes up. There's actually 3. So price pushed up, came down, entry. Price pushed up, came down, entry. This is the one that CT took. Price pushed up, came back down. His entry would have happened right here. And it looks like it would have played right through. Yeah, perfect. Yeah, this one right here blasted right through. So CT had like a, basically a jackpot move right there. It shot straight through. Yeah, unfortunately, we don't have a setup for the example I wanted to show, but you guys get the gist of it. You're basically just looking for reasons not to take the trade. So basically, if I see a momentum pullback scalp and I see a V1 variation somewhere, I'm probably going to skip it because I don't want to get caught in the fake out. All right, guys. So if there's any other questions regarding this, feel free to pop into the chat. Let's see, we covered the breakout V3 continuation with confluences and red flags. Same with the V1, same with the momentum pullback scalp. The last thing that I plan on covering today is going to be the trailing stop indicator. there's nothing really big with the trailing stop, guys. So there's not really too much for me to explain here, but I'll just show you guys anyways. So, and again, I'll make a video of this individually. I created this indicator to be a trailing stop, but I mean, realistically, I only really use it for the ETR. That's the, pretty much the main reason I use it for it, but it can be used for a lot of different things. Let's see, one more question here from Nikki. Nikki's asking, so for the V1, so the V1 is a confluence to not take the momentum pullback scalp and a confluence to take the V3. Yeah, exactly. So that's exactly what it is because, here, let me just show you again. So I'll just show you the confluences, like how they would work. I'm just going to draw lines on here. It's going to be easier for you guys to just see, what we typically look for. So like basically, like what Nikki mentioned. So usually a momentum pullback scalp will be like price comes up, retraces, and goes up higher, right? So this is a setup for a momentum pullback scalp. You have a buy signal right here. So you have a, let me just draw a line right here, color that green. So say, for example, we have a buy momentum right here, right? Price pushes up. And then it comes down, and then your entry would be like right here, right? The thing that you're looking for is you want to make sure that there's nothing up here. So if your TP is that, whatever, let me fix this. Yeah, I'm just so zoomed out that it doesn't. Okay, so basically when you have a momentum pullback scalp, this is a type of setup that you're looking for, but you're just making sure that there's nothing up here that's going to fake out your trade, right? You don't want price to come up and then say, for example, there's a V1 right here. This is what you don't want to happen. You want price to push up and then kind of go sideways here and come right back down, right? That's what you're scared of. So that's why you're looking for the V1 here to pretty much tell you not to take a trade. For the breakout V3, you have the same situation here where you're looking for price to push up, but you're looking for the opposite because your entry would happen like over here. Yeah, so same situation here again. You're basically looking for your entry to happen right here, but you're looking for the V1 before because you want that reversal to happen right here, right? You want price to push up, come back, reverse off this point, and then push up to your TP. So same pattern, you're just looking for reversals on different points. You're either looking for price to reverse from the bottom and continue back up, or you're looking for price to reverse off the top here and basically fake out your position. And this is what you kind of want to avoid because you don't want to get caught in this fake out where it comes back down. So it's pretty self-explanatory, pretty straightforward. But it'll make a lot more sense like during the live. So during these next couple live sessions, I'll be very detailed with pointing them out so that you guys can see them during live conditions. So next up, let's cover this trailing stop, and then we'll wrap this up for the day. So the way that this indicator works is you can use this with your own strategy. You don't have to use any of my strategies, but depending on where you want to take buys, like for example, so let's just start from like right here. Like say, for example, there's a buy signal. Or okay, we'll start from right here. Okay, like say, for example, or let me see if there's a better example here to show you where entry could happen. Okay, so right here. You say, for example, you're taking a pivot scalp or whatever. I don't know, whatever type of entry would be right here. You're taking a pivot scalp type entry, right? And you take this for a buy position right here. And you want to use a trailing stop. Say, for example, you don't want to take, a set TP stop loss. You want to use a trailing stop. So for this right here, you have no TP. TP is basically unlimited. And this trailing stop, let me just delete it, turn everything off. So you have the setup right there. And now you have your trailing stop indicator to basically show you where to move your stop loss. So when you enter this position, your original stop loss is going to be right here at this green line. Your stop loss only goes up. You never pull it back down lower. So with the trailing stop, you'll have it at 44. And then as price climbs higher, you'll see how this green line here follows price, right? When this green line follows price, you're just going to trail it up. So your stop loss was initially at 44. It's now at 24, 25. and it climbs up higher, right? As it climbs up higher, you're now trading at break even, right? Your stop loss is now at break even. And at this point, you're now trailing your stop loss higher. So right here, you can see how the green line continues to follow up. And like I mentioned earlier, your stop loss never goes back down. It just keeps going up higher. It goes up higher, higher, and higher. And as this continues to climb up higher, you just keep climbing your stop loss in profit higher and higher, right? So at this point, now your stop loss is in profit 63 points. And if you want to keep doing that, just keep holding it on. And then it goes up a little bit higher right here. And again, it never comes back lower. It just goes up higher. And you can see right here, this is where your stop loss is at. As soon as price comes down, it finally stops you out in profit. And you would have locked in a total profit of 74 points, 740 pips. So this is how the trailing stop indicator works. This is what it was developed for. This is why I put it together. But I don't like trading like this because I don't want to be on the charts like all day, just trailing my stop loss up, right? I'm like, okay, I'll just take one trade for 100 pips and I'm done. Rather than, like, of course you can make more profit doing this, but I'm not going to sit on my computer for like, 30 minutes or an hour just to continue like moving it up. It just doesn't work for my trading style. But I created this for other people in the group who like want to trade this way. So if you want to use a trailing stop, this is how the indicator works. And it works it works both ways. Like say for example, you take a sell at this point now, right? So I don't know, just say for example, you get a V1 variation right here, and you're like, okay, I want to start taking a sell at this point now. So at this point, if you're now taking a sell, you can do the same thing here. Take your sell position, and then you do the same thing. Your stop loss will be right there at 35. And then as price continues to move down, you just move your stop loss in profit. So price kind of moves down a little bit, stop loss gets dropped a little further, comes down further, just keeps dropping lower. Now your stop loss is in profit. And then you just keep moving it down lower and lower from here. At that low point. And then when it comes back up, it stops you out in profit. Right there at like 34 points. And then if you wanted to flip it back up, you can do the same thing. At that point, if you want to flip it back up, you just keep doing the same thing over and over again. But it can work with whatever strategy you like to apply, or if you want to use one of my strategies, that's fine too. But that's what this indicator is used for if you want to use a trailing stop. I had hopes of using it, but it's just too much work. I don't want to be on the charts all day. Like, the whole reason I got into trading is to be free and do whatever I want. So trading like this, it forces you to be on the chart, and I just don't want to be on the chart like that. So although it's a good strategy if you're okay with sitting at the chart, I personally don't like using it. So I just use it for the ATR now. But for those who want to use it as a trailing stop, it's completely fine. It works very well. It's just if you have the patience to make those adjustments. Yeah, exactly. Bamal said, absolutely, this becomes a full-time job. Yeah, and that's exactly what I'm avoiding. So I don't want to make it a full-time job. I'd rather just trade in the morning and be done. So for my FX, I'm still trading FX, but not as much. Because again, like you said, Bamal, like it becomes a full-time job. Even if I'm trading on the daily time frame, it requires me to be on the chart at 2 p.m. So it's like I got to drop everything I'm doing. So if I'm at the gym, or if I'm at the gun range, or if I'm doing something like playing golf or something, I got to be on my phone at 2 p.m. And I'm like, okay, do I need to enter a trader, or do I need to make some adjustments? And I hate doing that. So for FX, I'm in profit obviously, but it's not what I was anticipating. I thought it was going to be easy, but I just hate being on having to be on my computer or my phone or wherever I need to be at a set time. Except for like the live sessions in the morning. The mornings are fine because I have nothing else to do, but like during the day, it's a huge hassle for me personally. Yeah, all right, Maddie, I'll see you back here tomorrow. So guys, if there's any other questions, feel free to put them in the chat. I pretty much covered the main topics for today. If there's any other questions, feel free to put them up, and then we can cover whatever you need help with. But As you can see, it's pretty much super simple and straightforward. And yeah, moving forward, I think we're going to focus on breakout V3 variations and, or sorry, breakout V3 continuations and V1 variations, those two. Momentum pullback scalp, yes, but I don't think we're going to have as many entries as the others. So yeah, guys, if there's any other questions, feel free to put them in the chat. Otherwise, we'll wrap this up for the day. And I think that's about it. Yeah, no problem, Nikki. All right, guys, I'll see you guys here tomorrow. If there's any other questions, feel free to reach out. Otherwise, we'll be back here, same place, same time tomorrow for the next live session.